Question 821. Buyer Bruce purchases a home from owner Orville, paying in cash. However, there is a mortgage loan attached to the home, which Orville is still paying off. Given these circumstances, what kind of deed will probably be recorded after Bruce's purchase from Orville? A deed of reconveyance to buyer Bruce, B. Trust deed against buyer Bruce, C. Deed of reconveyance to owner Orville, D. Bill of sale to buyer Bruce. Correct answer is C. Deed of reconveyance to owner Orville. When Bruce purchases the home for cash, the existing mortgage loan on the property, owed by Orville, must typically be paid off at the close of escrow. This is done to ensure Bruce receives clear title, free of Orville's prior debt. Once Orville's mortgage loan is fully paid, the lender, or trustee, in states using deeds of trust like California, is legally obligated to release the lien on the property. The document that accomplishes this is a deed of reconveyance. This deed formally removes the mortgage or deed of trust from the public record, confirming that the debt has been satisfied. The deed of reconveyance is recorded in favor of the original borrower, Orville, demonstrating that his obligation has been fulfilled and the lien against the property he owned is cleared. Question 822. The cost of a capital improvement and its impact on market value are: A. Never similar, B. Always similar, C. Usually similar, D. Rarely similar. Correct answer is D. Rarely similar. While capital improvements can increase the value of a property, the cost of the improvement and the resulting increase in market value are not always proportional. Several factors can influence this relationship, including 1. Location. Improvements in desirable neighborhoods may have a greater impact on value than improvements in less desirable areas. 2. Market conditions. The overall real estate market can affect how much value an improvement adds to a property. 3. Quality of the improvement. Higher quality improvements are more likely to increase value significantly. 4. Cost of the improvement. The cost of the improvement itself is a factor, but it's not the sole determinant of increased value. In many cases, the cost of a capital improvement may exceed the increase in market value it generates. This is because the market may not fully appreciate the value of the improvement or because there may be other factors limiting the property's overall value. Therefore, it's important to carefully consider the potential return on investment before making significant capital improvements to a property. Question 823. John inherits a house from his late Aunt Jane. Mindful of John's past problems with the police, Jane inserts a condition in the bequest that should John ever be arrested, title to the house will revert to a charitable organization. John's property interest is A. life estate, B. Fee simple defeasible estate, C. An estate in fee, D. Tenancy at will. Correct answer is B. Fee simple defeasible estate. Tenancy at will is a landlord-tenant relationship where either party can terminate the tenancy at any time without notice. It's a very weak form of possession and has nothing to do with inheritable ownership like a fee simple. A life estate is an interest in real property that lasts for the duration of a person's life. While the interest is not absolute, the condition described, reverting upon arrest, is not typically how a standard life estate operates. A. Fee simple estate is the highest and most complete form of ownership. However, a defeasible or qualified fee simple means that the estate is subject to a condition. If that condition occurs, or fails to occur, the estate can be terminated. Specifically, this sounds like a fee simple determinable or a fee simple subject to condition subsequent. In a fee simple determinable, the estate automatically terminates upon the occurrence of the stated event, e.g., so long as, until, while. In a fee simple subject to condition subsequent, the grantor, or their heirs, designees, has the option to terminate the estate upon the occurrence of the stated event, e.g., provided that, on condition that, but if. Regardless of the precise subtype, the core idea is that John has ownership, fee simple, but it can be defeated or lost if the condition, being arrested, is met, causing it to revert. An estate in fee is a very broad term for fee simple ownership. While technically true that it's a type of fee estate, it doesn't specify the defeasible aspect, which is critical here. An estate in fee could also refer to a simple fee absolute, which has no such conditions. Question 824. When a homestead exemption has been filed by a debtor who is 65 or older, the property is exempt from judgment liens up to A. $50,000, B. $100,000, C. $175,000, D. The homestead exemption was discontinued by federal law in 2010. Correct answer is C. $175,000. The homestead exemption in California protects a certain amount of equity in a person's primary residence from being seized by creditors to satisfy a judgment. The amount of this exemption can vary based on factors like age, disability, and income. As of recent changes, the homestead exemption amounts in California are $175,000 for individuals who are 65 years or older, or disabled, or 55 years or older with a gross annual income not exceeding specific limits. $100,000 for a family unit. $75,000 for all other homeowners. However, it's important to note that effective January 1, 2021, California law significantly changed the homestead exemption amount. It is now the greater of $300,000 or the median home price in the county, not to exceed $600,000. It is now the greater of $300,000 or the median home price in the county, not to exceed $600,000. This change was made by AB 1885. Correct answer is C. $175,000. This suggests the question might be referencing an older version of the California homestead exemption law or a specific context. For the most current information, it's always best to refer to the latest California statutes. If the question is from a context that predates the 2021 change, then $175,000 would be correct for the specified category. Prior to January 1, 2021, the homestead exemption in California for a debtor who was 65 or older, or disabled, or certain low-income individuals, was indeed $175,000. However, it's important to note for current context that as of January 1, 2021, California's homestead exemption law significantly changed. The amount is now generally the greater of $300,000 or the countywide median sale price for a single-family home in the prior calendar year, not to exceed $600,000, which has been adjusted for inflation since then, now higher than $600,000. But based on the question and the provided correct answer, it refers to the law before that 2021 change. Question 825. The concept of rescission means that a contract is A. Altered, B. Filed with the court, C. Cancelled, D. Incorrect. Correct answer is C. Cancelled. Rescission means that a contract is terminated or cancelled. Both parties agree to rescind the contract, which essentially undoes the agreement and returns them to their original positions before the contract was formed. It makes the contract null and void from its inception. Question 826. A note payable for interest only is referred to as an A. Negotiable note, B. Soft money loan, C. Amortized loan, D. Straight note. Correct answer is D. Straight note. A negotiable note is a specific type of promissory note that meets certain legal requirements, making it easily transferable from one party to another. Its negotiability is important because it allows the holder of the note, the payee, to transfer their rights to collect payment to a third party. This third party can then enforce the payment, often without being subject to all the defenses that the original maker, debtor, might have had against the original payee. The term soft money loan doesn't have a single, universally strict legal definition. It generally refers to loans that are offered on more lenient or favorable terms than conventional market rate loans. These loans are often provided by governmental agencies, non-profit organizations, or sometimes even private lenders for specific purposes. An amortized loan is a loan in which the principal and interest are paid down over the loan term through a series of regular, equal payments. With each payment, a portion goes towards paying the interest accrued, and the remaining portion goes towards reducing the principal balance. In a straight note, or interest-only loan, the borrower makes periodic payments that cover only the interest accrued on the principal balance. The entire principal amount remains outstanding and is typically due in a lump sum payment at the end of the loan term. Question 827. In the General Accounting Practices System for Trust Funds, all of the following tools should be used, except A. Journal, B. Cash ledger, C. Columnar, D. Beneficiary ledger. Correct answer is C. Columnar. In general accounting practices for trust funds, the fundamental tools used to ensure accuracy, transparency, and proper management are journals and ledgers. Journal is a book of original entry where all financial transactions are recorded chronologically. It's the first place a transaction is entered. This is a fundamental and essential tool for any accounting system, including trust funds. A ledger organizes transactions by account. A cash ledger specifically tracks all cash receipts and disbursements. For a trust fund, accurately tracking cash is paramount. This is an essential tool. For a trust fund, it's crucial to keep separate, detailed accounts for each beneficiary, showing what funds belong to them, what has been disbursed, and what remains. A beneficiary ledger, or separate beneficiary accounts within a general ledger, is indispensable for proper trust accounting. Columnar term refers to a format for journals or ledgers, where specific types of transactions or accounts are organized into columns for easy tracking and summation. While a columnar journal or ledger is a very common and efficient way to record trust fund transactions, columnar itself is not a distinct accounting tool, in the same way a journal or ledger is. It's a design choice within those tools. Given that a journal, a cash ledger, and a beneficiary ledger are all distinct and essential record-keeping tools for trust funds, columnar stands out as describing a format rather than a unique tool. While useful, it's not a tool that should not be used, rather, it's a way of using other tools. The question asks what tool should not be used, and columnar doesn't fit the category of an actual accounting tool, in the same way the others do. Question 828. Which law mandates informing the public about the Sexual Offender Database? A. Megan's Law, B. Melrose Act, C. Unruh Act, D. Sex Offender Disclosure Act of 2002. Correct answer is A. Megan's Law. The Melrose Act is a California law that allows for the formation of special taxing districts to fund public facilities and services. Special taxes on property owners within the district. It has nothing to do with sex offender information. The Unruh Civil Rights Act is a California law that prohibits discrimination in public accommodations, housing, employment, and other areas. It deals with civil rights and discrimination, not sex offender registries. Megan's Law is a federal law that requires states to notify the public about the whereabouts of registered sex offenders. It was passed in 1996 in response to the murder of a young girl named Megan Kanka by a registered sex offender who lived in her neighborhood. While there is a Sex Offender Disclosure Act of 2002, it's not as widely known as Megan's Law and may not be the primary law mandating public notification about sex offender data. Therefore, Megan's Law is the federal law that requires states to inform the public about the whereabouts of registered sex offenders. In California, this is primarily done through the Megan's Law website. Real estate agents and sellers in California are also required to provide a notice to buyers about the existence of this database. Question 829. If a potential client brings a friend with him on a broker's tour of properties, the broker should A. Politely inform the friend he is not allowed on the tour. B. Double the number of properties being shown. C. Enlist the friend as an ally. D. None of the above. Correct answer is C. Enlist the friend as an ally. Politely informing the friend they are not allowed would likely alienate the client. Doubling the number of properties is unnecessary and could overwhelm the client. Politely acknowledging and including the friend creates a positive and welcoming atmosphere for the client. The friend may be an important confidant or advisor to the client, and their opinion could significantly influence the client's decision. By making the friend feel comfortable and valued, the broker can potentially turn them into an advocate for the property and the broker's services. The friend might offer perspectives or ask questions that the client hadn't considered, which can be helpful for the broker in understanding the client's needs better. A positive experience for the friend could lead to future referrals from them as well. A broker can handle the situation in a professional and courteous manner. Here are some possible approaches. 1. Ask the seller. The broker can politely ask the seller if they are comfortable with the friend joining the tour. If the seller agrees, the friend can participate. 2. Offer a separate tour. If the seller is not comfortable with the friend joining the main tour, the broker can offer to schedule a separate tour for the friend at a later time. 3. Provide information. The broker can provide the friend with information about the properties being shown, such as floor plans, photos, or virtual tours. It's important for the broker to prioritize the seller's preferences and ensure that everyone involved feels comfortable with the arrangement. Question 830. A 50-year-old residential property and a new residence are on comparable lots. The cost approach would be more efficient in appraising the A. New residence. B. Old residence. C. Either residence. D. The cost approach cannot be used for residential properties. Correct answer is A. New residence. The cost approach determines a property's value by estimating the current cost to rebuild or replicate its structures. From this figure, depreciation is subtracted. Finally, the value of the land is added to arrive at the total appraised value. The cost approach is highly reliable for a new residence because the cost of construction materials and labor are current and readily ascertainable. There is also minimal, if any, depreciation to calculate. For an older residence, like a 50-year-old property, the cost approach becomes much more challenging and less reliable. Estimating depreciation, physical deterioration, functional obsolescence, and external obsolescence on an older property is complex and highly subjective. It's difficult to accurately determine how much value has been lost due to age, wear and tear, outdated design features, or external factors over 50 years.